do you think was the defining dynamic of the quarter, and what do you think it'll be for Q4?
I actually think it was the issues that popped up with repo, right? We didn't think the financial plumbing issues are really indicative of anything systemic, right? It's just liquidity problems. We don't think it's solvency issues, but it scared people. And I think it also points to the fact that in the broader bond market, we're going to see liquidity issues going forward. And we're only starting to talk about that now.
Really? So what does the Fed need to do? What does New York Fed need to do?
So, I mean, the New York Fed's going to get back into their open market operations. They're going to look, at the asset and liability pieces of their balance sheet, but really it comes down to the fact that more collateral in the market's probably necessary, especially as funding needs come to call. And I think you put that along with the idea of slowing economic growth and startup issues and all these different things, and this all feels kind of fragile.
So is it a risk-off environment?
I would argue it is a risk-off environment. I know we're slightly underweight equities for the first time in a long time, and we're saying skim off of growth and reallocate to value, right? And that in itself feels risk-off.
What about the idea, though, as we were saying, we've at least so far made it to the end of September. It seems as if sentiment is kind of subdued. Maybe positioning is not really very aggressive, at least going into the fourth quarter. And maybe earnings on a year-over-year basis are kind of bottoming. So that's the bull spin. What do you say to that?
I like that bull spin.
I'm just curious how you would answer that.
No, yeah. I mean, I think longer run, we always have to make the case for equities. I think if you look at flows year to date, all the money's been going into bonds or cash equivalents, right? We're all aware of that. And there's been massive net outflows out of stocks, speaking to the fact that maybe, given flows alone, you have more upside potential for equities.
Yeah. In terms of setting up into the last quarter of the year, Samantha, did you feel it reminiscent of 1 year ago when we had a rough earnings season, we had China trade tensions, and we saw a precipitous decline in the markets?
Is it possible that we get a 15% decline in the markets this quarter? Absolutely. I really do think so, especially if the trade tensions deteriorate. We had that news over the weekend, which was alarming, at best, about stopping capital flows. So if anything, I think there's more downside risk, but I would say it feels very episodic in nature, right? It feels like these volatility swings are very temporary and then everything just subdues. So I think staying the course is probably key.
John Stoltzfus joins us this morning here on set as well. John,
good morning.
Good morning. Good to see you. We've been sort of putting Q3 into context and talking about whether or not there's reason to be cautious in the coming quarter because of some of these new dynamics that have revealed themselves in the past few weeks. Fair or not?
Absolutely fair. The question, anything that would impede the ability of the markets to function on a globalized basis would be a very serious thing. Related to the trade war itself, as it exists with tariffs, that negotiation continues, but especially the news on Friday, the possibility that the administration would limit capital flows. That was very worrisome. I'm out of breath. I just want you to know because I was racing to get here.
I know. We're going to give you a chance to catch
because I'm nervous about the market.
Navarro, on our air this morning, obviously pushed back. Treasury spokesperson over the weekend said no current plans.
Thank goodness.
Yes.
That was very helpful.
But do we believe the president has authorized a review?
I think that, let me put it this way, I think it's very possible given what we have seen thus far since 2016. Anything is possible. But would say this, I do think there is an election next year, and I do think the American people are very concerned that there would be any shakeup of economic activity for the consumer.